why don't we go ahead and kind of look at this momentum idea, these factors that you were looking at, and let's build a screen and see what comes up. So I'm going to turn it over to Dr. Stoxx here, and he's going to use MarketSmith to kind of create the screen. So tell us how you do it.
Well, thank you, Justin. And I will be building this in MarketSmith. You can use MarketSmith to do about 80%, maybe 85% of what I just told you about when we were building out the screen piece by piece. The last 15% or so, you'll need to go over to TipRanks and use that site to find out where the analysts are. But I've done a little bit of that work already for you. So I've already built the screen into MarketSmith. Let's go ahead and open up MarketSmith now. We've got the chart of Tesla on here. I've got all the proprietary screens that I've built out for my various trading services here on the left side. And I call the momentum scan that I use called Hot Stoxx. And if we open up that scan and just click on the Open Edit, and I'll show you the various pieces of this scan. So I start with a current price of $15 per share, which will knock out about 3,000 or so of all the stocks in the MarketSmith database. There's a sweet spot for trading momentum stocks, and it happens to be between $15 per share and $40 per share. You're going to get the greatest bang for the buck in that range. When you get under $15 per share, you start getting into stocks that may not be very stable, might have some other issues. As Bill O'Neill liked to say, you know, a cheap stock is usually cheap for a good reason. And over $40 a share, you start to get stocks that don't move nearly as quickly as those under 40. So 15 to 40 is a good sweet spot, but I don't put a high end on that range. I just start with 15. I've got a 50-day average volume of 500,000 shares per day. We're going to be getting in and out of these stocks fairly quickly. They're not day trades, but maybe after 2 or 3 days, the run peters out. Once a week is usually about the right time to hold on to the stocks that your scan pulls up. And then you run the scan again the next week to see if the stock is still on there. And if it's not, you sell it. So we want to make sure that we can get in and out of these stocks pretty quickly. For that, the real growth measurement here, we're using EPS estimate for the current year on a percentage basis, having increased at least 5%. Now, you're going to see that there were 1,600 stocks that passed through our filter before that. There are only 659 stocks that passed through that particular filter. So that knocks out quite a few of them. These are only stocks that are saying to the market, either through a corporate call or through an analyst covering the company, we're doing so well, we're selling so many of our widgets, we've got so many new customers that our previous estimate for what we're going to earn is too low. We need to raise it up. That's a very, very good thing.
Right.
LensX, as I said has the strongest correlation to forward price momentum over the next 2 to 3 months. After that, we're putting in our valuation filter, price to sales ratio of 1.0. 1.0 would be about the lowest I would go for price to sales. Otherwise, you're going to screen out too many stocks. You can play around with that filter a little bit, but you don't want to get too far above 1. 1 is sort of your mark for a stock that it still has a lot of room to grow, because the actual price of the company or the market cap of the company relative to revenue is still very, very low. We need to have in our scan some filters that tell us the stock is trending higher. It is, in fact, a momentum stock in the sense that it's moving up. So we put in a relative strength rating of a minimum of 80. And again, you can flip that around a little bit. You can go a little bit higher if you want, 82, 84, 86. If you're getting too many stocks passing through this filter, and in a very strong bull market, you will get too many stocks passing through. So you can filter with that. But right now, 80 is about the right number. I also have
just a quick question. A quick question on the RS rating. Do you ever play around with shorter term RS ratings? Because you could put in like a 3-month. Do you ever do that, or do you stick with the 12-month?
No, I haven't. I'm only using the Smart Select rating here. So, but that's a great tip, though. I'll have to see what other kind of stocks that would bring up.
Mm-hmm.
Because sometimes, yeah, those short-term bursts can be very fun to trade.
Mm-hmm.
So I have a comp rating in here. This is not absolutely necessary, but for me, it's a kind of safety valve, because the comp rating incorporates a number of things, including real earnings growth and acceleration, margins, and things like that. And then one of my favorite parameters, and you'll only find this in MarketSmith, and that is the SMR rating. It stands for sales growth. So that matches the sales price to sales ratio quite nicely. Margins, which is your measure of safety, what Warren Buffett calls the moat. And return on equity is the R. And that to me signals very good management. A company that has very good management is able to return strong income on the equity of the company. So if you have an SMR of A or B, you're already in the top 40% of stocks that are out there with respect to those three things. You don't have to have the SMR in there, but I like to have it. It's just my favorite sector, and all of my scans incorporate that to some degree.
Mm-hmm.
So we have 15 stocks that pass through our filter. And if we scroll down, we can take a good look at some of these. Now, I've already done this, and I did find a couple that I did like quite a bit. And I also took all these over to tip ranks and was able to whittle it down to a couple that are listed at a strong buy. But let's go ahead and take a look at some of these charts just so we get a good feel of what companies that satisfy all those requirements look like. So you can see that this is an energy play, and it is up near the highs.
And this is Liberty Energy. LBRT is the ticker symbol here.
LBRT, right. You can see it's doing a nice little pullback along with the market. It's still above the 50-period moving average, a 200-period moving average. And this is a nice little oversold pullback setup that is already showing your oversold stochastics, and kind of a nice little entry right there on the hammer candle today.
Yeah.
But it was not
saw a lot of those today. And
a lot of these pullbacks.
Well, actually, not just oil and gas, and a lot of stocks. Now, quick question though, when you're dealing with something like in the oil and gas space that tends to be cyclical, how often, price to sales, estimate revisions, all of these things are not normally something that you would think of using with a cyclical stock. Do you typically get cyclical stocks in there?
Well, yeah, we get all kinds. We do get retail. We get consumer cyclical stocks in there quite a bit. What we're doing is we're isolating or highlighting stocks that are in favor right now.
Yeah.
And so energy stocks, although they've had a little bit of a blip, but some of these oil and gas pipeline companies are doing really well. And right. So this scan will highlight stocks that are very much in favor with the market right now. And we're taking a short-term view on their forward momentum. And when that momentum wanes, we'll be out there. As I said before, there are ways that we use to determine that. But so I'm not worried.
And if we go back to LBRT, because you mentioned the stochastics, and just for people that do have MarketSmith, this is something that you can just go to the wrench in the top right-hand corner, and you can add the stochastics if you want to see those. So just real quickly, can you describe what it is that you're looking for? You mentioned oversold, so are you using that 20 kind of criteria? It getting below 20 for the fast line, the slow line? How are you using these stochastics?
Well, stochastics is the measurement of current price to a range of prices over a given period.
I'll look back.
I don't know exactly what stochastics is set at here, but usually the default is a 14 period.
I believe it is 14 days. Yeah.
14 period. Yeah. So because stochastics is down now under 20, which is a pretty rare signal for a trending market, that means that it's trading at the lower end of the range over the last 14 days. And you can see that pretty much from the price, reflected in the price. So we want stocks that are trading near, just off, or bouncing off of support. Support can come in all kinds of ways, but the best and strongest support is always former price pivots, former price areas of resistance that now can become support. So one of the things I'll be looking for here in a stock like this, a setup like this, not just the oversold stochastics, but how is it in relationship to former pivot highs? Now, MarketSmith will mark those. So
Right.
here's a former pivot high, 1659, and it is now the price of this stock is, where is the price up here?
1603.
1603. Sorry,
Mhm.
my eyesight not real good. So it is a little bit below that one, but it is certainly above the most recent previous pivot high, now support. It is above the 200, above the 50. So not a bad setup. The 50 period moving average is rising. The 20 period moving average is falling flat, but it's not falling at least.
Yeah.
But again, this one did not pass the tip ranks test,
Okay.
the analyst test.
Mm-hmm.
Let me show you one that did. And I actually bought this stock yesterday from this scan. And
this is Celestica. Ticker symbol is
Celestica.
CLS on this.
Yeah.
Mm-hmm.
Yeah, it's a company that what do they do? I looked at their website yesterday when I was digging down into the company.
Electronic contract manufacturing. So
yeah,
this is an area that some of the industrial stocks have been doing fairly well lately, and they took a little bit of a break.
They make the tech that help companies make their products more efficiently, measurements and that kind of thing. So and it's doing a nice little, got a big bump up on earnings, is holding the 20 price level very nicely. 3 days of upside, very good volume balance down here, RS rating of 99. And if you go over to tip ranks, you're going to see that it's at a strong buy, and there are several 5-star analysts in support. Mm-hmm. So this looks good from all angles. This would be one that you could buy. You would hold on to it. And where would you get out? Well, that's a bit of an art rather than a science. But if you're using something like the LRC or Bollinger Bands, which measure standard deviation against a mean, then you would sell once it gets up into that area, up into the top area, above the upper Bollinger Band.
Two standard deviation.
2.0 standard deviation. I use an overlay. So I use a 1.5 and a 2.0 standard deviation for the linear regression channel. And it gives a nice little pink band at the bottom and a blue band at the top between the 1.5 and 2.0. And my motto in my live trading room is let's buy the pink and let's sell the blue.
Okay.
And rinse and repeat.
Yeah.
So, so that looks good. I like CLS. It would be one that I could recommend. I even have my live trading room in shares. I'm in shares myself. My trend trading letter is in shares of CLS. Mm-hmm. Another one that looked good, if I could go down and find it here. There it is, APG. So this is a little different kind of setup. It's not the breakout setup of a CLS. This is more of a pullback setup, but it's a very shallow pullback. And it's been in a range from 20 to 30, almost 30. And that's a pretty sizable range, right? 10 points on a $25 stock. So this has some good movement to it. We want to see that. We want to see a stock that is able to move, not in a tight little 5% range over months and months. We don't want that. Nice pullback to the rising 50 period moving average. The 20 is in there somewhere. I don't really see it. And kind of hard on my small laptop.
It's just below there, so it's kind of
below.
The 21-day moving average line, or is that your 20?
Right.
So
we've got stochastics exactly where we want them. They're well below 20 with a fresh buy signal. It does look like it's satisfied the MarketSmith breakout technical signal here at 2384 when it broke above that, and I suspect that it's going to create a new buy signal when it gets up above 2957 for a whole new leg higher. So
and
this
definitely very tight action here. If you go to the weekly chart, you can see that this has that blue shading area, letting you know that it's had a lot of tight closes. So really, this wasn't so much of a pullback to the 10-week line as it was here. I'll wait here and let you catch up to me, type thing. It seems like. And I just real quick, I want to ask you. It seems like a lot of these stocks that you're talking about, it's really pullbacks that you're looking at to a large degree.
Well, it will bring up pullbacks, and that's partly because of the valuation filter. So a stock, when it's trading up at the 52-week highs, probably won't pass under 1.0 price to sales. It pulls back 5-10%. Suddenly it's under 1.0 price to sales. So that's another way that you can use, another technique you can use to get out of the trade when it has gone up quite a bit. If you run the scan a week later, 2 weeks later, and the stock has fallen off, then something is no longer fitting that system and it's time to sell.